Sri S.K. Goyalji, former chairman CBC, Sri J.K. Mittalji, Mr. Sujit Ghosh, my colleague Mr. N.K. Gupta, Mr. Vijay Chaudhary, ladies and gentlemen, good afternoon to all of you. And the important topic given to me, transition and preparedness. So are you ready? So we ready, right? See, since morning we are discussing this GST law. I would like to highlight one important parameter that first model GST law came on public domain on 14 June 2016. It was having 4 schedules and 1 GST valuation rule, 162 sections, 25 chapters, but in 162 section, there are more than 184 places it was said in a manner as prescribed, right? So we don't know what would be the rules. First model GST law now get converted into revised model GST law and put on public domain on 26th of November 2016. Just one parameter, 40,000 suggestion was given on first model GST law. And if you compare first model GST law versus revised model GST law, 30% provision got changed. 30% provision got changed. Now we all are deliberating on revised model GST law and wanted government should come out with a final draft, final model GST law with all rules in place. If at all we want to have GST implementation by July 1, 2017. And the important aspect would be transition and preparedness. Transition is very important. I will do 10 case study with all of you, and this is what required for our preparedness for GST. 10 case study. Transition provision is given in chapter 27, and chapter 27 start with section 165 to section 197. And these transitions are important because we are moving from existing indirect taxes to proposed GST. We have to take number of needful action so that we get effective credit. There is no loss to the business organization. As you know that our excise and service tax department going to be CGST and IGST officer. And VAT department going to be SGST officer. I need that kind of vibration. Yes, correct. It looks like now we are back to the rhythm. So please go all along with me. So they continue to enjoy as they are enjoying today. Excise and service tax and VAT they are enjoying today. They will continue to enjoy post GST. But let's see what are the things we can do for our preparedness. The first important one. If you are existingly registered either under excise, VAT or service tax, first question comes, am I supposed to take fresh registration in GST? Answer is big no. Answer is big no. Migration will happen. Migration means they are going to give us provisional registration certificate from the appointed date, and this appointed date can be July 1 or 1st September 2017. So we will be given provisional registration certificate. And then department going to ask requisite document and information which we need to submit. Once we submit the information, our provisional registration certificate get confirmed. If we don't submit, then this provisional registration certificate going to be cancelled. Now what is this migration then going on? This migration is nothing but with no legal backing. GST law has not come. They started migration, and migration is nothing but a data validation and document validation. Department is only doing document validation, nothing else with no legal backing. If you are posting a query to me, if last date for migration gone, any problem? No legal problem. Nothing happened. If you're existingly registered, they are going to give you provisional registration certificate. And important, you're centralized registered under service tax. You've got 29 offices in 29 states. You're centralized registered in Delhi. Post GST, we have to take registration in all the state where from we are supplying goods or supplying. So we have to move from centralized to decentralized. Second question may come that maybe your turnover from service tax perspective only 10 lakh rupees. But in GST, aggregate turnover is 20 lakh rupees. So you are going to get provisional registration certificate. You may not be willing to continue with GST registration. Still, you would be given provisional registration certificate. Then you are allowed to surrender. You can surrender your registration with the registration form number 24. These all options are available. First case study. Second, today we are taking credit of excise and service tax in SANVIT and VAT in VAT return. Provision says my SANVIT would be carried forward as CGST and my VAT would be carried forward as SGST. This is so simple, but what are the important things we have to keep it in our mind? They are saying it is possible only when SANVIT is being disclosed in the last return file preceding to the appointed date. If you have not availed credit, then it will not be carried forward. So what we have to make sure that we take credit and show in our return ER1 for excise, ST3 for service tax or under respective state VAT provision so that credit is being carried forward. Subsequent question may come to your mind that if you have reversed some credit because department is pushing you and telling you that this credit is not available, my suggestion to all of you would be you should take this credit back in your return. So that tomorrow, if you don't take credit, then it will not be carried forward. So take this credit and litigate the matter in case you are confident of credit is available. Please make sure that. Related point. What happened on input and input services in transit during the appointed date? Let's say you got raw material from Bangalore starting on 27th June. Excise duty charge on that invoice, but you are getting the raw material only on 2nd July, after appointed date. Then this particular credit is not being shown in the return, am I right? How this credit would be carried forward? Provision says, and these are the preparedness I'm telling you. Since morning we are discussing law and provision, but this technical session I thought of that we can customize for our preparedness. Provision said this credit would be available provided you pay taxes before the appointed date. You pay taxes before appointed date 1st July 2017 and you record the transaction in the books of accounts within 30 days. Then only this credit would be available. So you have to make sure that if any input and input services starts before appointed date, in transit taxes must be paid before the appointed date. And you have to record the transaction within 30 days, which can further be extended by 30 days more. Coming to the next component, third one, capital goods. Capital goods, we know 50% credit in the year of purchase, 50% in subsequent year, am I right? So let's say you avail 50% credit, but 50% is unavailed credit, which is not reflected in your return. Can we take that credit? Yes, we can take that credit, no problem. Only provision says that this capital goods credit is available only when it is eligible under earlier law, SANVIT Credit Rules 2004, and it is eligible in GST law. An irony of capital goods definition, Rule 2A, SANVIT Credit Rules. If any goods falling under chapter 82, 84, 85, 90, you know the definition, right? But capital goods definition is wider in GST law. And what is the definition says in GST law? Any goods whose value is being capitalized in the books of accounts, used or intended to be used in the course of furtherance of business. Too wider a definition. But what is eligible under earlier law with restrictive meaning, and what is eligible under GST law, wider meaning. First part. What happened capital goods in transit? I talked about input and input services. If capital goods in transit starting on 27 June from Bangalore with excise duty charge on excisable invoice, can you take credit? Can you take credit? Say yes or no, whatever coming to your mind. this credit will not be available. That is what revised model GST law says. But being PSG Chamber of Commerce, we have represented this subject matter. And we have said why this credit will not be available. It can be brought at par with input and input services. But this is the difference of input and input services in transit versus capital goods in transit. Coming to the fourth case study. If you are not supposed to be registered, you are SSI manufacturer, 1.5 crore. Or you are only a VAT trader, you have not taken excise registration. Or you are manufacturing exempted goods. Or you are providing exempted services. Or you are providing services under works contract service, construction service, or you are a first stage dealer, second stage dealer, or registered importer. The problem is, just take an example so that you can answer. Let's say you are a VAT dealer, or you are only VAT registered. So if you are only VAT registered, then it is for sure you must have availed the VAT credit, right? Let's say you got 10 crore rupees stock lying on 1st July 2017. And this stock has suffered the excise duty component. But you are only VAT registered. If you have only VAT registered, it means you have got VAT credit converted into SGST. What happened for the excise duty component? Which is already being suffered in your stock lying on appointed date, where the credit would be available. Section 169, chapter 27, important. You said yes, but look at the condition now. This yes coming with a condition. You have to comply with all those conditions. What is the condition? There are two ways possible. That the stock you may have purchased from a manufacturer. So he must have raised excisable cum tax invoice, right? Or you might have purchased from a dealer, trader. Then he might not have raised excisable invoices. But your excise duty component embedded in the price. Am I right? So what this provision says, credit is available on input, input in semi-finished goods, input in finished goods, three components, provided you are going to use for taxable outward supply first. Second, it is eligible in GST law. And third, it says your invoice should not be older than 12 months from the appointed date. Meaning thereby, your invoice pertaining to stock lying on 1st July 2017 should not be older than 12 months. So what you have to do, as a preparedness, you have to go back and check your stock. Create the stock statement, reconcile with the book statement, and follow the FIFO basis. First in, first out. So that you have requisite. You got all the invoices which is not older than 12 months. Important one, anti-profiteering clause. And which was agitated in the morning session by our President, PSG Chamber of Commerce. What this clause says, this credit which is now available, we have to pass on to the consumer. If we don't pass on to the consumer, department going to appoint designated authority. And this designated authority now come in and will check whether I have passed on the incidents or not, which we are agitating. We are saying this is not correct. And where from this anti-profiteering clause is being picked up from Malaysian GST. So we are saying you can't copy-paste provision of some other country in India scenario. You have to see whether Indian scenario is really adaptable to those kind of changes. That is the point we are raising. Now this is a situation when you are having excisable invoice. If you are not having excisable invoice, but still you have suffered the excise duty component, can you take credit? Can you take credit? You can take credit, but at a rate prescribed. At a rate prescribed. So this rate will come. So in all probability, rate would be lower than 12.5%. So please make sure that your maximum purchase would be from excisable manufacturer. You have excisable invoices, not older than 12 months, and you should not have CST purchase. If you have CST purchase, interstate purchase, CST component which is not creditable will not be carried forward post GST. So I hope you all are clear to this particular point, right? Coming to the next. Let's say you are manufacturing exempted goods. Exempted goods. When you are manufacturing exempted goods, it means your outward is not chargeable to excise duty. When outward is not chargeable to excise duty, you are not being given credit of excise duty paid on inputs or service tax paid on input services. But let's say your product is made taxable post GST. What happens? Stock line, where the credit would be available. Where the credit would be available. Available, right? You all agree? Am I clear to all of you? Perfect. Same provision you have to follow. Back to next provision. Case study number 5. You have manufacturing exempted goods. You have sold prior to 1st July 2017, but now it is returned back after 2017, July 1. Please tell me whether GST applicable, because prior to July 1, 2017, it was exempted. You might not have charged excise duty component or VAT component. But post July 1, 2017, it is being returned back. So the person returning the goods, is he required to charge GST because it is supply of goods from his side and he is SAC, whether GST applicable? So no, yes, mixed audience. So you are all interested to know provision, and you have to really do precaution, preparedness. First condition, it is 6 months before the appointed date. So I'm covering a position which is 6 months before. If it is prior to 6 months, then GST applicable. It should be within 6 months from the appointed date, and it should be returned within 6 months from the appointed date. So prior to 1st July 2017, 6 months, post 1st July 2017, 6 months. In that case, GST not applicable. But after 6 months, if it is returned, GST applicable. GST applicable. So you have to make sure that. What happened? Duty paid goods. You have sold prior to 1st July 2017, but returned after 1st July 2017. Whether GST applicable. In case of B2B transaction, the person returning the goods has to charge GST. Can you say why he has to charge GST? Anyone? It's a logical. The person who is returning the goods, he must have availed the credit and which would have carried forward. That's the reason GST applicable. But if it is B2C transaction, consumer returning the goods, duty paid goods, in that case, refund would be available in the hands of registered dealer because he must have charged taxes prior to 1st July 2017. Coming to the job work. Job work is very important, right? I'm a principal manufacturer. Let's assume you are a job worker. So my raw materials, input or semi-finished goods are lying in your premises. And I have removed the goods on notification number 214/1986. It means I have not charged the excise duty component. These goods are lying in your premises on appointed date. Now, after manufacturing, you are manufacturing intermediate goods, returning to the principal manufacturer. Please tell me GST applicable. So I'm getting little no. So I'm just finding the faces. Now, let me tell you one thing. These provisions are very, very important. I know GST law has got a number of other complications, but these are the preparedness now. We have to start devoting ourselves. And these are the transition provision important for all of us. What provision says that no taxes to be paid provided you are returning the goods within 6 months, which can further be extended by further 2 months. Provided be both principal manufacturer and job worker declare the raw material, inputs or semi-finished goods on the appointed date. If it is returned after 6 plus 2 months, then what happened? Then GST, ITC, which is input tax credit, need to be paid in terms of section 184 and of which no credit available. So you have to make sure that you are getting the material back within 6 plus 2 months. If you want to remove from job worker premises, you can remove within India, but on payment of GST. If you want to export from job worker premises, you can export without payment of taxes. This is what GST provision says. Coming to the next case study. Let's say you got 100 crore rupees contract. I'm going little faster because time frame I have to keep it in my mind. So I have to close within 20 minutes. So I'm little going faster, but making practically understandable to all of you. Let's say I got 100 crore rupees contract prior to July 1, 2017, which either upward revision or downward revision. Maybe 120 crore or maybe 80 crore after July 1, 2017, between mutual negotiation and discussion between the two parties. If it is upward revision, whether GST applicable? Of course applicable. You have to raise supplementary invoice or debit note within 30 days. Within 30 days from the date of revision. In case of downward revision, what happened in case of downward revision? Can you adjust your output tax liability? Yes, you can adjust your output tax liability by way of credit note, provided recipient reverse the credit to the extent of invoice raised earlier. Am I clear? So this is what the provision. What happened to our refund? Refund we have filed on export, export of goods, export of services. Under the earlier law, existing law, provision says refund would be permissible as per the earlier law, and refund would be given in cash. But in case your refund getting rejected, then this provision is silent, talking nothing. Can I go for appeal? It is saying nothing. But to my knowledge and to my considered view, we should have right to appeal against such rejection of refund claim. Coming back to the next component, let's say you are centralized registered SSE, service tax SSE, you got 29 offices, but you are registered only in Delhi. So you got Sandwich credit only in Delhi. Post GST, you have to go for decentralized registration, right? Am I right? So what happened is Sandwich credit lying in Delhi, how to distribute among 29 states? Provision says you can distribute this credit to any of your taxable units. Choice 100 crore rupees works contract prior to July 1, 2017. Let's say you got this contract on January 1, 2016. Now you got 50 crore rupees advance against this contract. 50 crore rupees advance against this contract. Advance received for works contract services with a service tax applicable. Applicable in terms of point of taxation rules, right? So we may pay service tax on works contract services treating original works, or it may be construction, 30% in terms of notification number 26/2012. So we pay this service tax liability, but supply of services are being made only after July 1, 2017. So taxes are being paid prior to July 1, 2017 when supply was not made, because in terms of point of taxation rule. But supply exactly happening only after July 1, 2017. Tell me whether GST applicable. To that extent, GST not applicable. Just imagine a situation, and you must be with me, whenever we enter a contract with any government party, we always get a contract, price is all inclusive, right? All inclusive. So they include all the taxes. Now, existingly, you may factor in the service tax component, maybe 4.5% or 6%, only in pricing. But post GST, your works contract will be supply of service contract in terms of Schedule 2. Supply of service contract. Now we are debating since morning what would be GST rate applicable on services, right? What we have discussed, what will be the rate discussed? 18%, am I right? And we all are talking about, are you going to levy 18% on construction services? Maybe it would be 12%, which we have heard 2 days back in media only. So even though 12% applied, treating works contract as a service contract, which is not factored in the price in the contract, because you have factored in only 4.5% or 6%. Look at the impact. Look at the impact, hitting back immediately. So what is the way forward? Now, if you are entering into any new contract, henceforth onward, please make sure that such kind of components are properly factored in, and a particular clause is being inserted, so that any incremental liability comes can be taken from the recipient, it should not be falling back on the supplier's head. Coming to the agent. Agent and principal contract, you know, today VAT is not chargeable. But post GST, if agent supplying goods on behalf of principal, GST applicable. Today, no VAT chargeable. So maybe agent is having stock on appointed date, maybe 10 crore rupees on July 1, 2017. So what happened? This stock is having post GST, he has to charge GST. Whether credit would be available in the hands of agent, because agent has not paid VAT component. Credit would be available. Only condition is that invoice should not be older than 12 months, credit is available, and principal has to reverse the credit so that it is available in the hands of agent. Capital goods, credit would be available. Coming to summing up my presentation, within 20 minutes, whatever I could conclude, transition and preparedness, let me put some light on preparedness. Either we are manufacturer, or we are trader, or we are service provider. From manufacturer perspective, you may have 4 manufacturing unit in one state, right? Migration. You would be given 4 user ID and password for migration. But now you have to determine, are you willing to continue with 4 registration in same state? Can you take 4 registration, or you can consolidate into 1 registration? You can consolidate. It is an option available to you. You may consolidate 4, or you may take separate registration as per your business need. But if you take separate registration within same state, implication 1, stock transfer. From one registered unit to another registered unit of same company within same state, GST applicable. So this impact need to be done. So from registration perspective, service provider, you are having only centralized registration today, but tomorrow you have to have 29 decentralized registration in 29 states. So we are moving from 1 registration to 29 registration. And now think of adjudication and assessment. And then come back to the return part. We all are hearing there will be 3 return per month compulsory. Outward supply return by 10th of next month. Inward supply return by 15th of next month. Consolidated return by 20th of next month. 3 return multiplied by 12. How many? How many, please, louder? 1 annual return, 37. If you are TDS deductor, 1 return per month. If you are ISD, input service distributor, again another 1 return. So 5 into 12, 60, plus 1 annual return, 61 return per registration. And you have taken 29 service tax, decentralized registration post GST. Look at the compliances is increasing. Under service tax provision, we only file 2 half-yearly return today. So of course compliances are increasing. But you can really pose this query to yourself, if compliance is increasing, how I can mitigate? Let me tell you, GST and network, which is working, this GST, and we are moving from manual to computerized GST, paperless GST. And what is this paperless GST? Supplier, let's say I'm a supplier, I would be raising my sell invoice. And my sell invoice would be auto-populated as purchase invoice for you, inward supply. You need not require to feed in your inward supply or purchase entry. It would be auto-populated. You have option to add, modify and delete in case any mistake is made by supplier. But you need not require to plug in or feed your purchase entry. So only outward supply becomes important. But if there is any mistake, it can be subsequently add, modify, delete in the hands of recipient as inward supply. And after outward and inward, consolidated return created to be filed by 20th of next month. When I'm talking about such thing, this preparedness from IT perspective required, right? You may be a large MNC, you may be a foreign MNC, and you may be a MSME and SME. And you'd be recalling I said in the morning session. I said if aggregate turnover is only 20 lakh rupees and government want to bring SME and MSME sector into GST net, at least they should be given some kind of relief measure. That 3 years there should not be any penalty provision for non-compliances, procedural non-compliances. But within this provision, GST input tax credit matching and mismatching. This is what matching. Bimal Jain mentioning 10,000 rupees as tax charge on my outward supply, whereas you have paid 20,000 rupees, which was actual amount. ITC mismatching. Or I've charged 10,000, but I'm only mentioning 1,000 rupees. Can you take credit or balance 9,000? These are called. And if I pay the taxes, you pay taxes to the supplier and supplier does not deposit. Whether recipient can take credit, these are subjective issue. Coming to the last conclusion component, which I want to draw your attention, how we can prepare ourselves. There's a way to look at GST law. I know we can look at GST law from critics' perspective and we can say these are all provision not going fine. We all understand this GST is not a best law. But definitely improvisation on existing indirect taxes. It has got its own problem, teething problem, which I say teething problem. It will overcome, it will remove over a period of time. But what we require to do, we require to prepare ourselves, whatever this law is there on public domain, and we have to start. So registration, the first step, return filing to avail credit is the second step, and then check your interstate purchase are being removed. You're not purchasing CST, at least for this transition time period. You may be maintaining 29 warehouses today. Just today's taxable invoice. Post GST, you don't require 29 warehouses. You may concentrate your business as a regional hub. Because interstate, today no credit available CST. Excise duty credit not available in the hands of bad dealers. CST credit not available. Post GST, interstate, IGST applicable. And IGST credit is available. And this can be used sequentially. First for IGST, CGST and SGST. So we are not only doing biggest indirect tax reform, we are doing biggest business reform. There are lot many things which I can carry on and carry forward to say that because of time given to me. So with this, thanks to each one of you. Thank you very much. Thank you.